Welcome back to the channel, Crypto Trend Trader, with another update on Bitcoin. But before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Welcome back. Before we get into our technical analysis today, I just want to touch base on, we barely even got yesterday's videos out about like the regurgitation of the same stuff over and over throughout like the crypto and YouTube and, social media space, that all of a sudden the correlation coefficient is rampant and everybody's got a video on how Bitcoin failed and it's over and it's correlated. And a couple people argued this, that, and the other, that it's not correlated. And all right, that was a perfect example. That was a perfect example of lack of originality in this space, lack of content. Everybody just regurgitates the same thing and just says it with a different accent or puts their little different tune on it. Now listen to me. I'm going to tell you why it's all BS, okay? I'm gonna get a little bit nerdy on you real quick, okay? So maybe you get it, maybe you don't, but the way these indicators work, the way that correlation coefficient works, all these indicators, all this design, there's only so much information these charts are telling you. There's only so much information from the price action on these charts that can be turned into a visual representation of that indicator. And essentially what that is, that correlation coefficient, it essentially takes two assets, okay? And then it takes a time frame that you set it on, and I'm not going to put it up on my chart because it's BS. It takes the time frame that you set it up on, and then it says on this time frame, did both these assets go up or did they both go down? And then it looks back at a certain number of like periods. So if you're on the daily and you have it set to 100, it looks back at the last 100 days and it says over the last 100 days, did this asset on average go up or down? Did the second asset go up or down? And then it says, were these assets correlated at 100% ratio, meaning they both always went up or always went down together? Or were they correlated 50-50, meaning they went up and down correlated 50% of the time? That's all that does. That does not tell you the true correlation of anything. All it does is basically it's just 100% the most simplest way of looking at a time frame and taking two assets and saying, did they go up or did they go down? So now let's talk about statistics. I learned this when I was very young, that statistics can be made to represent anything that you want. You can take any statistics and you can word them in a way to make them say what you want to say all the time. Okay, you can argue both sides of a point with the same statistics and be right. All right, so they're essentially like misleading. So don't look at something like that and think, oh, this correlation coefficient says that both Bitcoin and the stock market have been going up for the last 10 years, therefore they're both correlated, because that's not what Bitcoin is supposed to be. Bitcoin is essentially supposed to be a hedge against currency, okay? Gold is a hedge against currency in the sense that it was dug up from the ground. I've talked about this many times before. Gold and essentially precious metals are the original proof of work, okay? They are proof of work in the same way that Bitcoin is proof of work. Bitcoin was copied off of precious metals, in the sense that the reason a precious metal has value is because you have to dig it up from the ground, you have to refine it, you have to make it hot, you have to go through all this process, you have to pour it, you have to do all this and put in all this work to get that shiny piece of gold or silver or whatever it is. Okay? Bitcoin is the same way, in the sense that someone has to like spend a bunch of electricity and energy and do all this work solving a math problem to validate the transactions, therefore to get the block reward, and then essentially is rewarded for that work that they've done in Bitcoins, which have a value based on, essentially like whatever people agree was the last sold price of those Bitcoin. In the same way that gold is agreed upon, in the sense that however much work it costs to get that asset is typically what it's worth. So if it typically costs you about $4,000 to mine a Bitcoin, that's why they say that the floor, quote unquote, for Bitcoin's price is $4,000. It could fluctuate under that $4,000. It could go up, 2-3 times that price, but essentially it's always going to revert to like around what it costs to mine one. Because if it's extremely profitable to mine Bitcoin, everybody and their mom's going to be out here mining Bitcoin until essentially the hash rate adjusts and then it's no longer that profitable and then it bounces back out. Okay, and that's the same exact thing with gold and silver and all these assets. You'll see that what happens over time is as these assets prices drop so low, mines will start shutting down. People will literally stop mining silver or mining gold, or they'll mine it, but they will not sell it until the price goes back up. Even pawn shops, they'll take in a bunch of silver or whatever, or gold or something like that, and then if the price goes down, they won't sell it. They just hold on to it, and then when the price goes back up, that's why it's a store of value, in the sense that as long as liquidity is not an issue, as long as you don't need to sell that asset to maintain operating costs, you can just hold on to it, store the value, and when the time's right, you can sell it. Okay, and Bitcoin and crypto are the same exact way. Now that does not mean that the network couldn't have like some kind of crazy flaw come out and all of a sudden, you know, it drops off and it loses popularity and less people are mining it and it's less secure and the value drops, but it could still, you know, level out at like $2,000 and there's less people mining it, therefore that's the price of it. And it's the same thing with gold. If all of a sudden there's an abundance of gold, or in our case oil, like what's happening right now, there's this massive abundance of oil because of fracking and all these different things, and there's less usage for it, all of a sudden the price of oil is crashing. So what's going to happen is you know, essentially like it costs money to store oil, so at some point in time people are going to go out of business or have to sell this oil to get it out of warehouses, etc. So essentially you have to understand like the dynamic of all these things to truly understand how things are correlated. So to look at a chart on a weekly or monthly scale, or to try to look at an asset like Bitcoin that has literally no data points through like a recession or depression, because it came around and was invented after or during the 2010 area, like the 2008 depression, recession, etc., or recession, I should say. It's never been through this. It's never been tested. So you cannot take. You essentially need like multiple data points to have a pattern or a trend, and we don't have that in this case. Matter of fact, we don't even have one yet. So we really don't know how it's going to react. But what we would expect it to do, if it was essentially going to act how we hoped or wished or thought it was going to act, is we would expect it to act the same as gold is acting, which it is right now. It's acting exactly how gold is acting, because the reaction we're seeing right now in the markets, in all global markets, this is not the correlation, this is not the effects or whatever. This is literally what we're seeing right now. Is when you grab a hot pan, we're seeing that you just grabbed a pan that you didn't realize was hot and it burned you and you dropped it. That's what we're seeing right now. We're seeing the burn reaction of this initial, you know, outbreak and what's going on and the market scares and the, you know, economy and recession and all this. That's what we're seeing right now. Okay, so what happens after that? What happens after you drop that pan on the floor and it's full of like grease and oil and food? Okay, you're going to pick it up. You have to, there's a reaction after that. So there's going to be a reaction after this. There's going to be increased volatility. I'm not saying that Monday, you know, or Sunday night, whatever. I'm not saying these markets aren't just going to surge right back up to the upside. I'm not saying they're not going to drop another 10%. Okay, what I'm saying is there's going to be increased crazy amounts of volatility. And if you are not experienced and you don't know what you're doing, that this is the absolute worst time for you to be involved in these markets. Okay, you need to protect your capital and therefore you can grow it. All right. And now what we would expect to happen is, now that this is, like I said, gold dropped 10%, silver, all these things. That's that burn reaction, okay? So now we're going to start seeing the volatility, and then what we'll see over time is, oh man, there's so much information for me to even try to jam it into these videos, like honestly, because I could just go off on 30 different topics right now, and I have a direction I want to take this in. So essentially, basically what it comes down to is what's going to happen next is the Fed and, you know, Trump are going to try to pump a ton of liquidity into the markets. They're going to pump a ton of money back into the markets and start printing cash and trying to pump these markets back up and save this dump. So what that's going to do is essentially it's going to accelerate the hyperinflation process. So it's going to hyperinflate our currency, therefore devaluing it. Therefore, essentially your dollar becomes less powerful. So it's going to look like, compared to the dollar, that all other assets are getting more expensive. But essentially what's happening is the dollar is becoming less valuable, but at an exponentially like fast rate. Now the only reason the dollar has been able to hold its value in the way that it has so far and so strongly is because it's a world currency and everything else is based on the dollar, and people always want to get dollars and dollars are great, okay, because of oil and all this good stuff. But as all this starts happening with the economy and everything like that, and the dollar becomes more volatile and starts getting hyperinflated away, essentially we're going to see that change, or potentially see that change. And that's where things like gold and Bitcoin are essentially a hedge against the institution, a hedge against the system. And that's where you're going to actually see the lack of correlation, the disconnect between those assets and dollars. Okay, because when we got taken off the dollar standard, we saw an actual like disconnect between gold and like the American like dollar currency. Okay, but most people just went about their business because people were distracted and everything. Now people are understanding again that there isn't a link directly between them, and realizing that they can just pump this up. So as they devalue this dollar right now, that's how you end up getting something like a Bitcoin that's $250,000. Okay, it's hyperinflation. All right, because right now it seems ridiculous for you to say like, oh yeah, Bitcoin's going to $250,000. That sounds crazy when it's at $10,000. How's it going to go to $250,000? That's 25x. Okay, ask people how a gallon of milk is $2 or a gallon of gas is $2. Ask people how ridiculous it sounds to pay $10 for a gallon of gas because all of a sudden there's no gas at the gas stations or no milk at the grocery stores or whatever. That happens in real life. So 10 times Bitcoin's price right now, $8,500, that's going to be $85,000. Are you ready for an $85,000 Bitcoin, or does that sound crazy? See, that's how you get these crazy prices is you're only taking into account one thing. You're saying the dollar spending power remains the same and Bitcoin's value is going up. But that's not necessarily the case. A lot of times it's a combination of the two. Okay, the spending power of the dollar is going down, therefore hyperinflating away. Meanwhile, Bitcoin is becoming more desirable because it is losing less value, or losing value slower, or gaining value faster than the dollar is losing value. Therefore, it is a hedge against the system, or a store of value in the same way that gold is. But often you don't see gold's price necessarily going up in the same way that you'll see Bitcoin's price start going up, because the market cap is so low that as that demand increases, you will see an exponential increase in the price of Bitcoin. As where the demand for gold increases, it's not going to raise the price of gold in the same speed. Okay, so I hope that I broke that down to a way that it was easily understandable. But I just don't think people should be getting all bullish right now on these assets, on the markets, or whatever. We're going to see like crazy volatility, and we're going to see potentially massive jumps and dumps in these prices of these assets right now. And liquidity is key in these times. I've been saying it for months that cash is king. Liquidity is key, because it's going to be a race for the exits. I mean, one way or another, when it hits the fan, whether this is it or it's another 10 years, whatever it is, when it hits the fan, it's a race for the exits. Because I'm telling you right now, we're comfortable in United States, and we're very blessed, and fortunate that we don't have to worry about, going to the grocery store and there not being food, or going to the bank and, they're all shut down or whatever. But I'm telling you right now, people are comparing this stuff to the average flu or whatever. And you see these tapes from what's going on over in China, and you see these videos, and you see what's happening in the economy and how everyone's evacuated. And I'm telling you right now, those people walking around spraying chemicals all over everything, like hundreds of people in hazmat suits just spraying down everything outdoors, all over cities, all over buildings. They're shooting people with temperature guns to make sure that you don't have like a temperature above like average or whatever before they'll allow you into like buildings, restaurants, like public places. And in China, obviously it's different, but they're arresting people and, essentially like quarantining them. I'm just telling you right now, that doesn't sound like the common cold to me. That doesn't sound like the flu to me. And keep in mind also, these people are talking about, how long till a cure will be fine, da da da. First off, if you're not a scientist and you don't understand these things, you shouldn't be talking to people about this stuff. I'm going to tell you right now, I have a loose understanding for these things, but a virus cannot be cured. There is no cure for a virus. And these things tend to mutate, and you often don't see the worst form of it until after it starts to mutate. So as they start, essentially finding like vaccines and stuff for this, the virus will tend to mutate and become stronger before it becomes weaker. So I'm telling you, and if I'm not mistaken on this, it takes on average, for them to rush these things at the absolute fastest and absolute minimal clinical trials, and just to like rush in an epidemic and get this stuff on the street, I'm pretty sure it takes like 6 months to a year. 6 months to a year, not for a cure,